Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with family offices, hedge funds, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here today with Tracy Shuchart, our resident energy expert. Tracy, thank you so much for joining us. Uh, let's go through her background. Tracy started her career in 2005 in finance at the Chicago Board of Trade, where she worked her way up from broker to managing a trading desk on the trade floor. As the trading desk leader at a renowned futures, options, and energy OTC, CME Clearport brokerage, she worked with investment banking clients such as Goldman Sachs, Morgan Stanley, Societe Generale, as well as hedge fund clients, including Point72 and DE Shaw, to execute market positioning across all commodity asset classes. She leveraged her knowledge of the inner workings of the commodity markets and various market participants. She's known and built her own firm, Hilltower Resource Advisors, providing research and strategy for investors of all levels focused on commodity markets. She's a regular contributor on commodity markets for Fox Business, Bloomberg BNN, Ashkar News in Dubai, CNBC, Futures Radio Show, and CME Group. Tracy has a large following for a well-regarded Mic Drop Markets podcast. By the way, thank you for hosting me on that. Uh,
Absolutely.
and
Thank you.
Twitter or X Spaces. It's true. Tracy has one of the largest FinTwit accounts out there and is great about collaborating with people. She's also a graduate of the University of Southern California with degrees in political science and international relations. Tracy, thank you so much.
Thank you. That was quite the introduction.
I know, I know. So yeah, tables turn. You had me on last month
Yeah.
talking about the macro environment with Jack Farley, who's somebody I like and respect.
Absolutely. It was fantastic. Thank you very much.
Yeah, so you always get terrific guests. All right, so starting with the energy market, let's start with oil and gas. Or actually, they're becoming separate markets. Let's really talk about
Yeah.
oil right now. What are your thoughts on where we are? Why are prices down so much from last year? And then obviously we should touch on the geopolitical situation because you really can't look at oil right now without having a view on multiple wars.
Right. Absolutely. Well, I mean, we've kind of been consolidating and, our view has been higher for longer, for, the last couple of years. And so people, yes, 2022, when we had that big oil spike up to, 130 after the Russian invasion of Ukraine, those prices are unsustainable. You really don't want oil prices over 100 for any length of time because that really hurts emerging markets. It hurts everybody, right? So, everybody thinks it's like oil is down so much, but you have to remember, we're still at $77, which is relatively high compared to the norm, right? I
Right.
mean, I think the average is really around $30 a barrel if you take the length of how long contracts been in. And of course we've had spikes over 100 before, but again, those aren't sustainable. So, higher for longer, oil, I would, I don't, I hesitate to say oil so down because it's not really down. Again, at $77, those are still very elevated prices for how long we have been elevated in this price range, right?
Yeah, so I agree with you on this. I think one of the things that a lot of people who are in your position understand, but maybe people who aren't finance professionals miss is that oil prices are self-correcting, right? The cure for high oil prices is high oil prices. It brings on more supply. The cure for low oil prices, right? I mean, the swing producer right now is really like U.S. shale, which I think has a break even around 60 or 65. Is that right?
Well, depending on the basin and depending on the well, but I would say the average is 60 to 65. Some of them are as high as 80.
Right.
So
So when oil prices come down, a lot of that capacity will come offline because it's no longer economic to run it. So, these things are self-correcting. One thing you mentioned that I think is really interesting and a little bit contradictory. Um, so at Deep Knowledge Investing, we've agreed with you. We've been saying higher for longer for 2 years, basically. I think Powell's been really clear and the market has just chosen not to believe him. The thing that I think is really interesting is you end up with higher rates really as long as the economy stays good. But I think one of the reasons, you're right, reversion to mean is a big part of the decline in oil prices. And it's not that they're low, right? It's 77, they're not low. Um, but I think one of the reasons why they're not higher is because of fear of a recession, a worldwide recession. So here's the question: how do we have higher rates and greater fears of recession?
Well, we've had fears of recession for 2 years now. And I think, because as soon as the yield curve inverted, everybody was just waiting for a recession, right? Now we've been at a point where we've had a yield curve inversion longer than any time in history. And, I have often on my thought market spaces asked people that know that market much better than I, is this time it's different? And the consensus still seems to be, no, it's not different this time. We're still headed for a recession. And so I think the markets have been expecting a recession for, 2 years now. One might argue that Europe is in a recession, Germany particularly. But we really haven't seen that in the US yet, even though everybody's waiting for it.
So here's the thing on that. I agree with you that the most dangerous words in finance, right? It's different this time. And I'm going to say it anyway. Here's why I think it is different this time. We have a Congress that is spending like they're trying to basically they're Keynesians trying to pull us out of a recession, except we don't have one. And we have, unemployment below 4%. And so we have a situation, I think, where Congress has their thumb on the scale in a really, in a way that we've never seen before when we're not trying to pull ourselves out of a recession, right? And so how do
Yeah,
you have a
and
recession?
Yellen, right?
Yeah,
And you have Yellen working against, how many treasuries is she issuing? You know what I'm saying? So
right.
it's that you have that fiscal policy versus monetary policy, and it's that push-pull, right? As soon as Powell does something, then it's counterweighted by fiscal policy.
Yeah, for the last 3 to 6 months, we've been talking about kind of this quiet secret war between Congress and the Treasury on one hand, right? Stimulating overspending combined with monetization, which is the equivalent of dollar printing on one side, versus Powell and the Fed on the other, who are desperately trying to reduce stimulus and get inflation under control. And these guys, they're polite to each other, but behind the scenes they're fighting it out. Um, and so I think that is the thing that could be different, right? As Powell raised rates, the yield curve inverted, and people said, "Oh no, we're going to have a recession." Except, as you correctly point out, between Congress and the Treasury, how do you have a recession when they're literally I mean, they're basically they're implementing Ben Bernanke's helicopter money policy,
Right.
right? So it's all stimulus on one side and a desperate effort at restriction by the other. I mean, I don't think Powell has control of this. I think Congress and the Fed do.
Well, to me, it seems that way so far. I mean, the Fed was able to get down, recession, but now, we had hot numbers today that came out, right? And that's not surprising because it's really hard to keep a lid on inflation for that long with that much fiscal stimulus on the other side, right? And you still have, a lot of, still energy prices, even though they've come down a lot, they're still elevated. But if you look today, we had, I think motor vehicle insurance 20% was one of the biggest contributors to CPI. And those things kind of come with the green revolution, right? Because those premiums are charged for electric vehicles for various reasons that we, go in later if you want. But so with and particularly with the green revolution, there's even more more spending, right? So I think it's going to be hard. I mean, I think they're going to have to accept higher for longer, or inflation wise, right, instead of 2%, maybe 3%, or or they, Powell tries to push us into a recession still.
Yeah, I don't know that it's something that their thinking is it's something we have to accept. I think, we've hit $34 trillion of on-balance sheet debt, another $200 trillion of off-balance sheet debt. To me, it's obvious that they not only want inflation, that Washington, D.C. needs inflation, because nobody from either party is going to cut spending. Rob Farian and I were talking about this. We were filming the Five Things video version last night. And, one of the things that we said is do not think there's help coming in November if President Trump is back in the White House. And just imagine a scenario where the Republicans have a clean sweep, they take over Congress and the Senate. What do you think the odds are that they're going to cut spending? I put that at about 0.
Nobody's going to cut spending.
Exactly.
The Democrats aren't going to cut spending either,
Right.
right? And it's especially not going to happen right, in front of an election year. I think I reposted something just a few minutes ago that said the White House is freaking out over the CPI number because they're afraid, Powell won't cut rates, and they're desperately wanting him to cut rates in front, they don't want to go into a recession in front of an election. So, my comment was, well, Yellen's going to have to work overtime.
Yeah. Where are they going to stick all of those treasury bills?
Exactly.
I mean, they could try selling them to Russia and China, except that's not working so well.
Well, right.
Yeah. I don't think Japan wants to buy more of them either.
Probably not at this point.
Yeah, they've been selling. So, Tracy, do you have a base case for oil? Do you have a thought on what happens this year? And I realize predicting commodity prices is just, super fun. You know, is
It's really hard. I think we're set to stay range bound this year, and then probably the next level higher in 2025, just looking at supply demand numbers. But as long as we stay range bound, that's not a bad thing,
right.
right? I don't think it's a bad thing if we're somewhere between, say, for WTI, say, 68 and 82. I mean, it's a wide range, but I mean, as long as we stay in range, we keep oil prices relatively stable, that's not a bad thing. And, that would put Brent just a little bit higher. That's kind of right in the sweet spot where OPEC really wants it. So, taking some of this volatility out, I mean, we've really been range bound since November. It's quite a long time. And, with a little, bit of a peak and a trough above and below kind of that mid-range, but I think that's a good thing for the market. Again, spiking oil prices are not good for anybody, and particularly emerging markets, which in non-oil producing countries that hold a lot of US dollar denominated debt. So there becomes a big problem if you have, if sustained oil prices, say, over $100.
Yeah. So for the people listening to this who aren't dealing with energy issues all the time, let me just give a little translation for this. Tracy's talking about WTI being range bound, basically saying it'll be flattish, but up and down throughout the year without, a trend that goes up and down. WTI stands for West Texas Intermediate, and it's generally the domestic oil index that we look at. She's saying, look for Brent to be higher. That is an international index. So basically what she's saying is US prices will be at one level, international prices a little bit higher. And then Tracy, what else was there that you were making another point at the end that I think I missed?
Just about really high sustained oil prices for, say, emerging markets.
Right. Yeah. And so that's a great point as well. Remember, even though the petrodollar is in the process of being broken, Saudi Arabia has started to sell oil in currencies other than the dollar, ending an agreement that was made with Secretary of State Henry Kissinger in the 1970s. Imagine you're an emerging market, you're buying oil in dollars, and the purchasing power of the dollar continues to degrade. You can end up having to pay a lot more in your own currency to get more of those dollars, especially in places where they don't necessarily have that much of a cushion. That sound about right?
Yep.
All right. So Tracy, from a geopolitical point of view, we have a couple of wars, a potential third one, starting in Venezuela or at their border. What do you think happens in any of these situations, and what does it do to your thoughts on the price of oil?
Well, I think let's start with the Venezuela Guyana conflict right now, which is not really a conflict. You have to understand this has been a dispute for the last 120 years. And so, this is nothing new. Maybe people just heard about this for the first time, but it's nothing new. Absolutely nothing new. And since US assets are in Guyana right now, particularly Exxon, in 2019, when Maduro raising, started raising issues with this again, we sent the US Air Force there to protect American assets. And so the US Air Force is there. And then just recently, Britain sent their Navy there because they're a Commonwealth nation, Guyana is. And so I don't really think that Maduro, I think it's just saber rattling on Maduro's part right now because he's seeing how much oil is coming out of Guyana, because this is, relatively new in the oil world. These discoveries here and how much they're producing. And so, but I don't really think that, and I could be wrong, but I don't really think he's going to make a move with US military there, with the British military there. And he doesn't really have, he doesn't really have the military to back him up to do so, right? His army is not that strong. So that's just my feelings on that. That said, always, you never know what you don't know. So it's definitely something to keep your eye on, particularly because we have US assets there as well. And so that's the Venezuela thing. So, market should, keep abreast of it, but I would lean towards the side of nothing's material is going to come of that. And then if we look at this Red Sea issue, the reason we haven't really seen oil prices spike is because oil, well, at least in the beginning, was able to transit the Red Sea, no problem. Tankers were fine. It was the container market that really suffered the brunt of the attacks, and thus, started to move away from the Red Sea. That said, we have seen, tankers now are avoiding the Red Sea after a couple of them were attacked. But that's really affected the tanker market more so than the oil market, because oil is still flowing. You have a lot of the big producers really can export on, on the straight side instead of the Red Sea side.
Tracy, why do you think they were letting the oil tankers go through? Right? I mean, if their goal was to cause maximum pain, wouldn't that have been a good place to aim?
I think initially they didn't, because they're mostly other Arab nations that are right, and we're really targeting or trying to target, U.S. and well, the Western countries, but really U.S. and the U.K. So I think that they were, you have to understand that, Iran wants their oil to be able to flow freely in those transit areas as well. And so we know the Houthis are backed by the IRGC. And so, I think that they kind of left oil alone initially. But again, there was a couple incidences, and now tankers are mostly avoiding that area.
Yeah, no, noted. And we've seen transport costs go up as a result.
Yeah, absolutely. Transport costs, really, who's bearing the brunt of this right now is the European market, right? Because you have to go around the Cape of Africa, and it adds another 10 to 20 days, depending on the origination port of that oil. And so right now, that's just reaching, just started reaching a couple of weeks ago, the European market. So they're going to be mostly affected by this, where the US market is generally not. They will, we get a lot of our oil from Saudi Arabia, from Iraq, from, where that can take alternate routes, let's say, that without going around the Cape.
Sure. And while we're talking about what's going on in Europe, want to take a minute on German energy policy?
That's my favorite. It's my favorite subject ever.
I know. I know. You think I was going to let you off this call without talking about German energy policy? So do you want to call it a catastrophic self-immolation, or just
Yes,
intentional economic suicide?
but
Or do you have a fourth option?
I can't decide whether, and I keep saying that. I was like, either this is like intentional, or these people are just that dumb. Like, I just really don't understand it. And the hole keeps getting deeper and deeper and deeper. And it all started when they started shutting down their nuclear reactors. They shut down 6 in the middle of an energy crisis for them, in the middle of, when oil and gas prices spiked in 2022 after the Russian invasion of Ukraine. And so that's when they decided, we're going to shut down nuclear facilities. What?
Right. And you know what? That's kind of my litmus test for figuring out whether an environmentalist really wants a cleaner environment, or whether they just have an anti-human agenda. Which is, I asked them, tell me your view on nuclear power. Because if they're really concerned about carbon dioxide emissions, um,
Nuclear's way to go.
yeah,
But
it,
it's not, but I think there is that whole degrowth movement, right? That basically would like to see us back in, you know, living like the Amish people. Not that there's anything wrong with that, but you can't you can't go backwards like that.
well, and here's the thing: there's nothing wrong with being Amish and deciding that that's the life you want to live. The thing is, those people have choices, and the Amish people, they're one of the things I respect about that culture is they give their own people the ability to understand the outside world, and then they can choose. They're not
Right.
forced to live like that. But these busybodies want to force the rest of us to live the way they
They
want
want
us
to,
to.
right.
Right.
Exactly. And so that's really, and I agree with you, Gary, that the litmus test is nuclear. If they're against nuclear, but they want a clean energy policy, then I think they have other motivations going on behind their decision.
Right. Then it's an anti-human agenda, which, they're entitled to have their point of view, but then we should understand what they're for and what they're against. But saying that you're in favor of a clean environment while you denigrate nuclear, like, there's no way in the world. You know what Germany ended up using when they closed down those nuclear plants to make up
Oh,
for it? Yeah, coal, super dirty. You know what else they used? Wood.
wood. Yep, wood
Yeah,
pulp.
which is really, it's inefficient. And guess what you're burning? Carbon,
Exactly.
right? So, this
It
none,
makes
none,
it makes no sense. And that, and the thing is that the aftershocks of these mistakes just keep compounding, because now you're seeing industries leave, right? You have,
right?
a huge industry like BASF, the chemical company, who was huge in Germany, right? You saw they built a facility here in the United States. Then 2 years ago, when the energy crisis happened, they decided to expand their facility in the US and shut down parts of their German facilities. And they also moved to China in the meantime. So,
Yeah.
Germany's losing their competitive edge in manufacturing, and they're going elsewhere.
Yeah. And when that happens, that's not going to be great for their economy. And as a result of all this, their energy usage, as we talked about, has gotten dirtier and more carbon intensive. It's not working for anybody. And the thing that's crazy about all of this is what we're seeing are Western countries deciding they want to reduce their carbon emissions. So they're outsourcing production to China and other places with weaker environmental controls. So what we're not doing, we're not actually reducing pollution. We're offshoring to places that have greater pollution.
Oh, absolutely.
Yeah. So I mean, it's hard to take any of this stuff seriously from a policy point of view, or at least from a science point of view. Um, but I do want to get your views on the nuclear market. Before we do that, let's go back. and talk about oil and gas for just a minute. Are there any companies in particular that you like right now that you think are really interesting?
I really like straight play refiners, and I have for a while. So that would be like MPC, VLO, PSX. I think that, refining capacity in the United States is not going to grow. You've had several refiners, the ones in California, which we call the soy boys, that have turned to biodiesel, right? You had Chevron and MPC to some extent in California switch over to biodiesel. In California, that's unique to California, but I think that refiners will continue to do well, especially with oil prices kind of higher for longer, and the fact that we're just not expanding, we're not really expanding refining capacity, and we have aging facilities that are breaking down often.
So on that topic, one of the things to me that's very similar to refining are pipelines, right? It's the infrastructure you need to either prepare or move products from crude to distillate. And again, just like you talked about, very hard to get this stuff permitted right now, right? Despite the fact that moving hydrocarbons via pipeline is a lot safer than doing it by truck, which
But
is the alternative. But go get another pipeline approved in the US. Any thoughts on the pipeline companies like
uh,
EPD, ET, any of those guys?
I am kind of agnostic on them right now because they can't expand. And so I'm kind of agnostic on that right now.
Fair enough. They can expand, but the yield is insanely high.
Yeah, and they're just, I think I would have to see some lucrative plans and deals in place right now, and particularly if we have, Biden just had these export, um, what is it? Halt. Okay, it's not a for natural gas. So a lot of the plans to move natural gas to the coast, right, to the Gulf Coast to export it as LNG are kind of on hold. Everything's on hold right now. Again, I do think that decision has more to do with the election than anything else, but
On that topic, while we're talking about the election and oil, any thoughts? Does the White House ever refill the SPR, or are they just going to roll into the fall for the third straight year with fingers crossed that a hurricane doesn't take out like Louisiana production?
they're not going to refill it. I mean, they said they are, but really, we've really, since the Biden administration, we've released over 210 million barrels. So far, they put out, so far, if you include the offers out there, meaning that haven't been filled yet, it'll be 20 million barrel refill by, by the end of 2024. And that's and I'm being very generous here because, we've got almost 9 million of that hasn't even been put out on the market yet for a bid from the oil companies. So I'm being very generous at 20,
Right. Yeah.
which is
So
nothing.
right. Yeah. Basically, what you're saying is they're talking about over the next year refilling 1/10 of what they drained a year ago.
Right.
Right. At this point, it's actually 2 years ago. Right. We've gone into two straight falls with a very light SPR.
Yeah, it was 2022 was a major, and then we had like another 26 million barrels in 2023 that were left over.
Yeah. So again, for people listening to this who aren't, buried in this all the time, the SPR is the Strategic Petroleum Reserve. And when gas prices got high a couple of years ago, the White House started selling off the SPR to get gas prices down. And to their credit, it was an effective political ploy. It did bring gas down ahead of the elections. The Democratic Party did outperform in the last election. So it was an effective gambit. The issue though is the
You can't do that
population.
again.
Right. Yeah. They're now out of of dry powder to do that, so to speak. And The SPR is at its lowest level since what, 1982, something like it. It's been
Mhm.
40 years. And so the population of the US and our energy usage has done nothing but go up in that time. But as all we've had this increase in population and demand for energy, we have a situation where we have the reserves we had in place 40 years ago, and that's a really bad match. And so we go into every hurricane season now, fingers crossed, that production doesn't come offline, because if it does, we are really going to have a problem.
Yeah, absolutely. And there is the argument, the other argument is we don't need an SPR anymore because we have shale. But that just assumes that shale is, that my problem with this argument is, first of all, you can't just turn it on. It takes a few months to get it on. Second of all, it's not the oil companies, if they're not making money on it, they're not going to do it. Right. Nobody's expanding capacity right now. They're buying capacity. That's why you see all these mergers right now. And in addition to that, if you have a hurricane and you need it immediately, are you going to wait 6 months for them to dig it out of the get it out of the ground? I mean,
Right.
yeah, so I do not buy the argument that, shale is our SPR and we don't actually need one anymore. And the other issue is that our refineries are tooled for heavy crude.
That's the issue.
And, and that's another issue. So we can give them all the light crude you want, but they can't do anything with it.
Right. So, Tracy, that's a really key point. I want to emphasize it for the people who are listening to this. The key point is that the shale oil that we extract here in the United States, we don't have the right refineries to refine it. And so we actually, like, our refineries are set up to deal with a different grade of crude. And that's why the United States and most large energy producers actually both import and export energy. It's because not everybody can process or refine what they have domestically.
Absolutely. Global energy flows. I mean, it's good, and it's I won't go into the minutia of it, but you could ship, we could export to Colombia. They could refine it and then send it somewhere else. so
Right. Yeah.
so
And by the way, the higher transportation costs and greater transportation times through the Panama Canal, that's not helping either.
exactly.
Yeah, you and I were chatting about that on X or Twitter the other day. And I thought you made a great point on why the energy companies are choosing um basically the extra time of going around South America rather than the additional cost of having a second boat on the other side, right?
Right. Yeah.
Was that that
So,
was
yep, that was actually cheaper because we were talking about it was Maersk, I think, that was doing that.
yeah,
And they were shipping it, training it to the other side, and then picking up again. And because of the cost and the extra added wait time, because the wait times in Panama Canal right now are astronomical. You can be waiting up to 45 days. That's 45 days that you've got, you know, cost to run the ship. You've got crew, you've got, there's just maintenance to keep up the ship just hanging out. And so all those costs are, it's very expensive to run one of those big container ships on a daily basis.
yeah, absolutely. So let's shift the conversation for a bit. One of the things you and I talk about often is uranium. I was writing about this a couple weeks ago. I think 2025 is set to be the highest level of nuclear energy production in history. So what do you think happens with the supply demand curves there?
Well, I think that I think that uranium's kind of in a bull market for, at least the next to at least the end of the decade, looking at all the projects that are being built out and looking at our supply situation, because there is supply coming on the line, but not a lot, not enough. We're still in a supply deficit, but you have to realize that, you can't just dig a hole in the ground and pull it up. You've got permitting process and things of that nature, which can take years. And it could take up in the U.S. mining permits can take a decade just to get the permit.
Right. Right.
Right. So, I think we're still set for, a supply deficit. I think it's still in nuclear energy in general is in a bull market. Obviously, we have seen uranium prices come back a little bit, but, you have to understand they've been practically vertical for a year. So, a little bit of air out of that market is fine, but if you pull up a chart a little, it's good to see a little bit of air that's been let out of this market, but not too much. And I think that's good for the market. But I do think this market's set up to be, a bull run for to the end of the decade at least.
Yeah, that's my thinking on it as well. What I've read is that, and no one has exact numbers on this, but worldwide uranium stockpiles are about 150 million tons. And the supply demand imbalance right now is about 30 million tons a year. So what that means is that every year we're going through about 20% of our stockpiles and just wearing them down and wearing them down. And this is happening at the same time that, Germany aside, a lot of older nuclear plants are being, their decommission date is being pushed out. And there are more new nuclear plants under construction. And every time you start a new nuclear plant, you end up with, what is it, about 3 times your normal baseload uranium usage to seed the plant. And
Yeah.
so we're basically in a deficit situation right now.
Well,
And
and you have Japan just started, they're starting up 12 that were shut down.
yeah. Yeah, I mean that right there tells you something. And I think, one of the reasons people have been afraid of nuclear is every time there's in history there's been a meltdown or problem, it grabs a ton of attention, but the new plants don't melt down. The safety profile of a Gen 4 plant is very different from, the Chernobyl fears that so many people have.
Yeah, absolutely, absolutely. And Fukushima and everybody, but that was, it was on the coast and they had a tsunami.
Yeah.
I mean, accidents happen, but you have to, accidents happen everywhere. How many refinery fires are there? How many? I mean, there's accidents in, look at windmills. Windmills catch on fire. Windmills, I mean, you have problems with solar panels too. I mean, so you're never going to find something that there's never an accident in history. It's just not going to happen, right?
Right. And the difference, though, is nobody makes Godzilla films about an accident at an oil refining plant.
True.
Right. It's the nuclear plants that where you end up with a monster destroying your entire city, which is super scary. It's, you know what?
Yeah.
It's like the Michael Guyed view of FinTwit. He keeps doing these hilarious videos with Mothra and Godzilla and the credit event and lumber. They're great videos. So, do you think uranium prices continue to rise? Because I think, we both think there's continued supply demand imbalance, but you're correctly pointing out, hey, wait a minute, uranium prices have doubled in the last, what is it, 9 months, something like that?
Yeah. So they're kind of, they're not, it's not, I don't think there's going to be any kind of mean reversion or anything like that. But it's, nice to have it, like this market settle a little bit before the next leg higher, which, again, I do think it's a bull market, but I think right now a little bit of a rest is fine, right? I mean,
Yeah.
but there's
I
still oil, it's still over $100, which is great for junior miners.
Yeah, I was surprised last week at the market reaction in uranium prices to Cameco's earnings. The things that jumped out at me was they missed their production target, which had previously been lowered. I think they went from something like expecting 20 million tons to expecting 18 and a half. They did 17 and a half. I'm estimating. Um, and then they announced that their 2024 production was going to fall short of their 2024 supply targets. And so I'm thinking to myself, wait a minute, they're telling you we produced less than we expected to in 2023. We're going to need to buy in the spot market in 2024, right? They're buying in the spot market in both years. How was that a negative for uranium prices?
I, it wasn't, but I think again, I think that was a technical move. I don't think it really meant anything because that chemical came on the heels of Kazakhstan, who said they were falling short on production. Right, just a week before, you had Kazakhstan, their main producer, said that we're falling short of our production targets as well.
Right. Yeah. So I think the answer to that then is the one that you gave me when we were chatting through DMs last week, which is what we have are these companies missing production targets and the price of uranium coming down. And it's not so much a reaction to the news, it's more a matter of, just like you said, reversion to the mean. The price of uranium had gone up so much that, it was going to take a breather before going up more.
Exactly.
Yeah,
I think
we
it was
do
just a,
see. Go ahead.
yeah, exactly. I think it was just a technical move, I mean, at some
Right.
point, people are going to start taking profits, right?
Yeah, I mean, at some point though, that's, what, that's an interesting question. One of the things that a lot of my subscribers ask me is, how do you value this? How do you come up with a target price for uranium? And my view on it is the only thing you can really do is look at supply and demand. With certain things, you can say, well, there's a certain economic value. The issue is baseload generation is so important for people. It's literally life and death, particularly in the winter. And so you have a situation also where uranium is only fuel is only 5% of the cost of running a nuclear plant. So the price of fuel could go up a lot and you wouldn't shut it down. It's sort of, to me, it feels like trying to figure out the right price of commodities like wheat or corn. You asked me what it's worth. My answer is, how hungry are you?
Right.
I mean, yeah, the answer is potentially everything you own, because it could be life or death.
Absolutely. Well, like I said, it's, I don't, the fundamentals are so strong in that market. I'm not really concerned about a few dollars dip here or there, but I'm not trading outright futures in uranium either. So,
You know what? People ask me this question all the time because a lot of the uranium, the proxies to get exposure to it, you can't necessarily trade on every platform.
right.
What's your favorite way to get exposure to this idea?
Well, there's several ETFs. I think we kind of talked about that a little the other day. Um, so it depends how you want to be sort of playing this. You could, if you like miners, not everybody likes miners, but there's what is it? Sorry. There's URNM, uh that's a Sprott product. If you want kind of just straight uranium that a lot of retail trades, that's URA. And then there's another one that's interesting, that's NLR, which is also it's both nuclear and uranium. So if you don't want just a straight uranium play, and you want some more nuclear in there, they've got a little broader product range. Then that would be something that interests you.
Got it. Okay. So Tracy, we've got like, 10, 15 minutes left here. Um, what are the one or two key things that you're focused on right now that you don't see people talking about so much, right? Because a lot of the stuff we've just covered, these are things that a lot of people are talking about. And certainly I wanted your view on it. What are the things that you think aren't getting enough attention right now?
I think silver and copper are getting a lot of attention right now.
What has your attention about that?
And so, I think, I have been bullish the silver market. What I like about silver is it's not only a store of value, and it trades like the redheaded stepchild. I do understand
Yeah.
that. Um, but I think that over the long run, I think it'll perform very well because it's not only a store of value trade, but it's also an industrial metal, basically, right? So you need silver for every electrical component in an EV, which has 20 times the amount of electrical components that's just in an ICE vehicle. So on that alone, if EV production, if EV demand production targets are even halfway close to what the energy companies think, or the IEA, these, I will say US market's been very slow on the uptake, but globally they are performing better. But so even if you have 20% of what they think that those kind of targets are going to go to, that you're going to need a lot of silver. You also need a lot of silver for wind turbines. You also need a lot of silver for solar panels. So if we're really going to go ahead with these energies, then you're going to need a lot of silver. And so, and the market is in deficit for the first time, right? And the deficit literally erased the 11 last years of surplus.
Yeah, it's a huge difference. The people I know who spend a lot of time following the silver market have told me they believe that market is one of the most manipulated in the world.
Oh
And
yeah.
and there's no accurate price discovery. That's their feeling on it. What do you think that's accurate?
Yeah, I think gold's manipulated as well, to be honest with you. I think it really is. And so, when I look at a market, say I'm interested in silver, I'm not going to be trading outright silver on that, right? I'm either going to be trading a miner and or, something silver related on the equity side, and not, again, like I wouldn't be in a silver ETF or trading silver futures.
Why would you prefer a miner over a silver ETF? Or
Um,
actually just owning physical silver?
Physical silver is great. It's precious metals. I don't think I think that's always good to have. The physical gold, silver. You never
Yeah,
know what could happen, right?
right.
So that's always a good trade. Absolutely. I just I like I lean towards the miners in a lot of these metals. Um, just because there's not a lot of them anymore, right? And there's not a lot of new projects going on. And so the ones that are around, you have to obviously be choosy who you're going to choose, because there's a lot of bad projects out there. But, the ones that look good probably will outperform the actual silver market,
Yeah,
in my.
when we talk about these being manipulated markets, one thing that really jumps out at me, I was reading an article about gold, I think last night, and the um the gold linked products that trade around that market is something like 100 times the amount of physical gold in the world. So basically,
Yeah,
for every ounce of gold, people are trading something 100 different things, or
paper itself.
that are supposed to be proxies for owning gold. And so that's fine in a hypothetical, yeah, can this track that kind of world? But the real issue is that if everyone who believes they own gold said, I would like my gold now,
you It's
the
not there.
yeah,
So
it's not
yeah,
supplyable.
so
You
I was
don't,
gonna say,
yeah.
if you want to be in an ETF for a precious metal, I definitely find one that's backed by the physical, in my opinion.
Yeah, right. You would think, and yet, it's a situation where, if people who think they own gold or silver asked for it, the shortage would be about 99%.
Oh, absolutely.
Yeah, it's a huge problem. By
Would
the
be.
way, for anybody who's thinking about owning physical metals, Tracy and I both think it's a great idea. Tracy, I'd love to get your opinion on that. One of the things I've told people is, despite the appeal, do not put gold in a U.S. bank safe deposit box. We just had that case in California where the FBI.
Took everybody's safe deposit box? Yeah,
Yeah.
absolutely agree.
Yeah. I mean, they literally took if you had more than $5,000 worth of value in your safe deposit box, they
They took it.
confiscated it despite having no evidence that anyone had committed a crime. Well, they had evidence that some people had committed a crime, but that the crime of everybody else was using a safe deposit box, and a bank where someone else used a safe deposit box for criminal purposes. And so they confiscated everybody's assets if they had more than $5,000. It was a multi-year court case just to try to recover.
Yeah, absolutely. I mean, that's a nightmare.
Yeah. So here's the better question. If people want to own physical, what would you recommend that they do? Because there's a limit to how much that you'd want to have in your home for obvious reasons.
Right, unless you had a safe. But you can, have, there are some big vault companies that will store it for you. And so, just do your research.
Yeah.
Just make sure that it's there if you want it.
Yeah. But I think the key thing here is that the banks are not a trustworthy place to put that.
Yeah, I
Um,
wouldn't.
yeah.
I
And
wouldn't put 5,000. I wouldn't put cash or jewelry. It's
yeah.
big.
No, I'm
Just-
I'm with you. If you're gonna put something in a safe deposit box, it should have no value to anyone other than you. Yeah, that makes sense. All right. So I like your point on precious metals. Any other key things that have your focus right now that just aren't getting enough attention from people?
So really, that's it. Copper. Again, I think that said, I think, and I've been talking about copper for a while now. But there aren't many people talking about it. I've done a few podcasts on it, but again, another huge deficit. We're still in a huge deficit. Personally, I think this is going to be an H2 story. I think it's going to be very difficult for copper to break out now with what's going on in China, plus the strength of the US dollar. So if we do see the Fed cut rates, I think that's going to be very beneficial to uh, copper, and perhaps that's when we begin to see it break that $4 level that's been really difficult.
The interesting thing about this to me is that so many people have been, as we talked about early in this call, have been projecting a recession. And we did get one in 2022, despite the fact that people didn't want to acknowledge it. Um, but so we've got all these fears of a recession, but the reason you would own copper is because you think that there will be economic growth, right? More industrial production. That's sort of what copper is correlated with, right? Or do you have other thoughts on this?
Yeah, but and just it doesn't have to be that we have this a big, huge growth story, but again, this is also another kind of green transition play. But I think that we will see, I think we will see some manufacturing start to shape up a little bit in Europe, Germany aside. I think that uh, I think that we're going to see some growth in China. Um, after everything kind of bottoms out, I think we're going to see extreme growth in India. So I think there's a lot of other countries, Vietnam also, for example. I think we're seeing growth in other countries other than the traditional countries that we look at. Like everybody typically looks at China for, oh, we got to talk China if we're going to talk commodities because it's only China. That's I think that's everybody's go-to. But we are seeing demand pick up at a faster pace than in other countries than China is declining, if that how would I describe that right, if that makes sense. But we're seeing,
Yeah.
growth pick up, particularly in India for a lot of these commodities and oil and gas in a faster pace than, we're seeing any kind of decline in China, which in China, by the way, we haven't seen a decline in demand for oil and gas. Believe it or not, last year they imported more oil than they ever have in history. So, but, everyone again still seems to think that, looks at the manufacturing sector, looks at the property sector, looks at, traditional things of that nature and automatically assumes that their consumption has gone way down. But that fact is not necessarily the case. They also are refining a lot more than they were in the past. So they're importing it, refining it, and exporting it.
And building coal plants, lots of coal plants.
And building lots of coal plants. Yes.
Yes, right. So as the West decides to become more environmentally conscious, we are shipping our production to places that are building coal plants.
Well, yes,
Yeah.
we India as well.
Right. Yeah. We do not have a coherent energy policy. Anyway, Tracy, thank you so much for doing this. Always amazing to get
Absolutely.
your point of view on this. How can people find you?
So obviously I'm on Twitter at Shigirl, CHIGRL. I'm also at hilltowerresourceadvisors.com. And then I also do some things for Damped Spring, Andy Constant. And that's Damped Spring, just like it sounds.com.
Perfect. All right. Well, Tracy Shuchart, thank you so much. Really appreciate it. And to everyone who's been watching this, we really appreciate your time. Thank you.
Thank you.